only on Bloomberg Quint.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. Markets trade on a weak note. The Nifty is down for the fifth day in a row, its longest losing streak since March this year. TCS is the top gainer on the Nifty after its annual report highlights bright prospects for its investments in the digital business. And Ultratech is set to become the third largest cement producer in the world after it gets set to take over Century Textiles' cement business. And Punjab National Bank gains in trade despite Moody's and India ratings cutting their outlook on the stock.
Well, those are the headlines by Agam. Viewers, thanks for tuning in to Countdown. My name is Neeraj Shah. And let's take a look at what the markets are doing. Afraid precious little on the upside, at least. We're in fact trading at the lowest point of the day. And it looks a lot worse than what it is, to be honest. But 0.7% lowest point of the day. The broader markets too coming off. The market breadth is not looking terribly positive. Look at what's happened in the mid-cap and the small-cap indices. Or look at the advanced decline, actually. The market breadth is worse than what we've seen in any of the days last week when the markets would have corrected over 1% as well. So the broader markets are taking it on the chin in a meaningful way in the session today. Bring up the heat map. I would guess a higher peppering of red as opposed to green. Very few gainers, you would have to say. Remember, when we started off, Ultratech was right up there amongst the gainers. Now you have the defensive nature and the defensive bent in terms of TCS, HCL Tech, Infosys, and some gains to the IT names, essentially. Ultratech is nowhere present out here in the list of gainers. Banks have come off. Pharma has come off meaningfully. It's not just Reddy's. You also have Sun Pharma, Cipla somewhere down the line as well. All of these stocks have come off, and autos are losing momentum thick and fast. So fair bit of red, not enough green on the screen. What's happening to individual pockets? I think we've seen that pain in the mid-cap end of the market as well. So look at the result reactions that we've seen for 2 or 3 stocks in the session today. I'm just marking out stocks which came out with numbers after market hours in Friday's session. Ashok Leyland was around market hours. So that one is down about 10%, but some bit of serious profit booking here. Sanghi, which has anyway corrected quite a bit after a weak set of numbers, down about 8.5%. And Amara Raja is off the lows of the day, but still under some pressure in the session today. That aside, let's bring up some gainers and losers. So Sheela Foam is reacting very well to its numbers. Good, about 8.5% kind of a reaction. Union Bank doing okay. PSU banks by and large haven't done too badly today. SBI 2 is up in the green. And Sugar as a basket is doing very, very well for itself in the session today. That entire bucket of stocks is doing very well. And some small cap gainers, again, has one mid-cap or small-cap bank to itself. So good going out here as well. But this is more the gainers and losers from the cash market. I mean, look at that, the kind of falls that a SpiceJet or a Sudarshan Chemicals has seen. But while we're looking at this market, it's also important to look at what some of the liquid movers are doing in the session. How is the FNO build-up looking like? Agam, what do you have for us?
Well, Neeraj, the turnover is largely average, a little less than 5 lakh crores for the derivative space on the National Stock Exchange. But, you know, when I consider the Nifty futures, that's where we're looking at very little change in open interest. So just about 1.5% added there. There you have it, about 1.3% added. And this is despite the fact that we are seeing more weakness on the benchmark indices. Let's pull up the Nifty Bank futures as well. And while we have seen weakness seeping in there as well, the open interest is higher when it comes to the increase there. So around 6.5% there. Taking a look at the India Volatility Index, as one might expect, slightly higher up, now inching towards 14.5. However, a lot of these traders will not be very wary because it's not above the mark of 15, because that these days is considered to be an area which could be considered dangerous. That said, let's take a look at some of these stocks which are buzzing in trade. But before I do, I want to also pull up the changes in open interest with respect to the Nifty, and there you have it. That's where you're seeing the most increase when it comes to the 10,600 call, a little more writing coming along there, and thereby a lot of traders out there betting against the Nifty moving above that level, certainly today and perhaps until tomorrow as well. That said, let's pull up Colgate-Palmolive. We are expecting earnings soon for this particular stock. It's showing a lot of strength. It's up around 2.5%, and open interest surging by as much as 22%. We're expecting a very strong quarter as well for Colgate-Palmolive. But on the losing end, Strides Shasun continues to show weakness. Another 20% added, even as the underlying declines by as much as another 11%. And it's the same for Amara Raja Batteries. More weakness coming in. And even though it has recovered from day's lows, we're still seeing a 3.5% drop, with the open interest increase of much as 18% towards fresh shorts. And finally, want to address Century Textiles. Well, we are seeing this weakness largely on the adjustment that is cement business will move over to Ultratech Cement. But there are shorts building into the system with near 16% added in open interest. So watch out for this counter. We'll have to see how valuations eventually play out. But these are just some of the stocks that I'm keeping an eye on, Neeraj, in today's day of trade.
Well, let's talk about what the global markets are showing before we talk about domestic names. So it's Monday when we get your Global Voice to talk about all the global factors making the headlines and the impact. Joining us today is Daniel Morris, he's Senior Investment Strategist at BNP Paribas Asset Management from UK. Daniel, good having you, and thank you so much for taking the time out. Good morning to you out there. How are you viewing the current developments and the impact that it could have on equity markets per se? One, the US-China calling off their so-called trade war, but that having little or no impact on asset classes by and large. Crude has continued its merry ways. Equity markets are not duly reacting. And two, there's part two of that question. What's happening to crude and the resultant impact on inflation parameters for almost all economies, particularly emerging markets?
Absolutely. I think it is very notable that even with this apparent progress between the U.S. and China on the trade front, you haven't seen that much impact on equities. And I think it explains why up to now a lot of people have explained the somewhat lackluster performance of equities on trade tensions. We never really put much credence into that. We weren't too worried about an escalation towards a trade war. So then if that problem seems to become resolved, you haven't then seen the big rebound. So it suggests it wasn't such an issue in the first place. We think it's been much more about the increase in U.S. interest rates. That's what's dragged on the market, despite what was a very, very good earnings season in the U.S. You didn't see much reaction in stocks. Clearly, the rise in rates and therefore the rise in the dollar has dragged on emerging market equities, and that factor is probably going to persist longer than necessarily the concerns we currently have around trade tensions.
Right, Daniel. So keeping in mind your expectations when it comes to the U.S. interest rate trajectory, how are you expecting American equity markets to move, say, over the next couple of months?
Well, I think in the short term, it's probably going to continue to be a bit choppy. I don't know that we're finished in terms of rising rates in the U.S. We know we have more issuance coming from the U.S. Treasury now this week to fund a rising U.S. budget deficit. As you pointed out, the increase in oil prices is having an impact on inflation expectations, even if you really shouldn't expect a short-term move in the oil prices to drive inflation expectations today. That's the way it works. And so with higher inflation expectations, then that means higher U.S. Treasury yields and yields elsewhere. So I think in the short term, it's going to continue to be challenging for equities. The reason we're not terribly concerned, however, is if you look at the underlying earnings growth trend, it's still quite positive. So it's suggesting in the medium term, you still should have profit growth, and that's the most important thing for equities. But in the shorter term, higher rates is probably going to be a bit of a drag.
Right. In that case, what does it mean for fund managers out there when it comes to allocations of funds across America and Europe in comparison to some of the relatively more emerging economies?
Well, I think one thing that's changed this year, say, versus last year is there's less obvious valuation gaps between the markets. Decisions you made last year could have been based on, this market looks overvalued and this one at least relatively less expensive, and so I'm going to allocate accordingly. With rising earnings expectations but modest prices, you've actually seen price earnings multiples decline. And now there's not such a big gap between, say, developed markets and emerging markets the way you had last year. There's not such a big gap between the U.S. and Europe like you had last year. So the valuation perspective is more balanced. So I think what investors need to do, asset managers need to do, is to evaluate their earnings trend as opposed to the possibility of a compression or an expansion in multiples. So from that point of view, I think you're probably still interested in U.S. technology, where we see quite strong positive earnings revisions, where you're more concerned certainly about interest rate sensitive sectors in the U.S., and frankly, for the short term, probably still concerned about emerging markets with the dollar strengthening.
In fact, what impact does dollar, that even in dollar strengthening, or the one that we've seen thus far as well, have on emerging market exporting nations, if any? Because we haven't seen a material correlation, but for there being a sentimental correlation in the short term, and it's very difficult to figure out whether the dollar will have exemplary strength vis-a-vis the EMs over the course of the remainder of the year as well. What's the base case assumption, Daniel?
Well, our base case is that the dollar ultimately will revert to a depreciating trend against both emerging market and developed market currencies. So by the end of 2018, but in the short term, we think it probably will continue to strengthen because these interest rate expectations certainly continue to move up in the U.S. Now, for emerging markets, that a stronger dollar in the short term, you think, should be better for certainly EM exporters. I think the reason you haven't seen a more positive reaction among them is we think fundamentally the market doesn't think the dollar is going to appreciate over the medium term, so you don't really get the medium term benefit for the exporters. And of course, in the short term, it just reduces your local currency return, and so that's not particularly attractive. The other concerns clearly that we have is what's happening to sentiment towards emerging markets, and starting with Argentina, now with Venezuela, are investors that aren't necessarily emerging market specialists starting to see more bad news coming out of emerging markets and the risk that they start repatriating their funds, certainly out of emerging market debt and then emerging market equities, because at this point, a 3.1% yield on U.S. Treasuries looks quite good on a risk-adjusted basis. So I think we're waiting to see how far that sentiment swings against emerging markets before really feeling it's a good time to go back in.
Part two of my question then, Daniel, and final question from mine at least, would be that if the LATAM emerging markets are facing such major issues, and we, as you rightly said, both of the nations are under a big question mark, would favorably placed EMs, the likes of India and others, find favor? Or, and if you track India from a top-down approach, do you believe that there is a case for money to move into India? Because thus far, we've only seen outflows, majorly seen outflows in the current calendar from out of India.
Yeah, well, we think that's probably driven by this broader swing to negative sentiment towards EM. Clearly, this year, Latin America, on one hand, has benefited from the surprising rally in oil prices and commodity prices generally. It's a question of how much further that can go. Certainly for oil, it does seem to be driven a lot by short-term factors now, you know, Iran the most obvious one, but supply constraints, Venezuela, and so on. And whether that necessarily will persist. So if you ultimately see a lower oil price between now and the end of the year, that's going to take some of the momentum away from LATAM and the commodity exporters. The reason we are more optimistic on Asia, EM in particular, and also, you know, larger domestic demand-driven markets like India, Indonesia, domestic China, and so on, is that we think that's the opportunity. We like the service story, we like the consumer demand story within emerging markets, and think that's the better medium-term play than the commodity-sensitive markets, and in addition, really the exporters that with what we think is going to be a higher level of trade tensions to some degree permanently could be a drag on those markets.
Daniel, the usual concerns with foreign investors in India is its valuations. At what point in time do valuations become relatively more attractive for India when compared to other Asian economies right now? Because the reason I ask is we have seen the Indian equities come off from their lifetime highs.
Well, you know, emerging markets valuations on a lot of them, if you say look 1 year out in terms of earnings expectations, do seem quite high, but really you should be pricing or trying to price 3 to 5 years out. And from that point of view, given the earnings growth potential that you have in India, it would suggest the valuations may seem a little bit overstated. You have still significant reform prospects within India, and if that's implemented, if it's actualized, you should see significant profit growth, and that's going to support the valuation. So in the short term, certainly maybe some investors are shying away because multiples do seem higher than some of the markets, but we hope that that really is driven fundamentally by brighter earnings prospects.
Okay, Daniel, we'll leave it at that. Thank you so much for taking the time out and speaking with us today at Bloomberg Quint India, and have a great week ahead.
Thanks.
The senior investment strategist at BNP Paribas Asset Management was saying that the longer-term trend remains of the dollar depreciation against the emerging market currencies. For now, we're seeing anything but depreciation in the dollar. Well, a bunch of names have been taken to the cleaners today. Seeing a lot of pain in strong names as well as weak names. So look at what's happened, for example, to Sterlite Tech at 306, the company which is arguably liked by a lot of people and came out with good numbers, is now nudging another 3% downtick today, nudging the 300 mark. It was at 360 when it came out with a good set of numbers. So that's about a 15% erosion in that market cap. Sanghi, of course, came out with a poor set of numbers, so that's separate. But a bunch of these mid caps and small caps are getting punished in a meaningful way. Ashok Leyland, if you just look at what it has done month to date, month to date would be a good idea. 135 currently down 8.5%, but if you just look at what the month to date returns is, or the last 15 days or the last 1 month return is there, 12% downtick, but a substantial pullback from those 160, 165 levels that we've seen this stock trade at. So even stronger names are getting punished, and getting punished very, very strongly. Okay, move on to more quarterly numbers. This one came out with a good set of numbers, I thought. The steady set of numbers, at least on the bottom line. The top line was up about 7%, but margins expanded to about 10% this time. What were the key factors contributing to the healthy numbers? Let's ask the management of Prabhat Dairy. Joining us on the show is Joint Managing Director and Chief Executive Officer Vivek Nirmal. Vivek, good having you. Thanks so much for joining in. 7% growth this quarter. Are you on track for FY20 targets for growth? I mean, does FY18 give you the confidence that FY20 will be met?
So pretty much we announced our Vision 2020 of reaching 2,000 crores by 2020, and I think we are pretty much on track. Even YOY, we have more than 25% volume growth. Obviously, the value growth is not that much because the milk prices are low, and hence the realization are low. Sorry, but yeah, we are pretty much on track.
Okay, so keeping in mind your consumer business will drive growth going forward, Vivek. We're looking at targets of as much as 50% eventually for the turnover of FY20. What products are likely to push this growth?
Largely, it's going to be liquid milk, curd, cheese. These are the three categories which we expect to drive the overall growth in the consumer business.
And bulk of this growth will come from ghee, milk and curd, of course, as you said. But will it be a combination of all of these products?
Overall, out of 1,000 crores, largely, as I said, the focus is on milk and dahi. We already have packing stations at 3 places in Maharashtra. We are adding 2 more this year. We expect the overall growth, through the presence in tier 2 towns, tier 3 towns. We obviously have a very large plant near Bombay, and we are implementing different strategies, developing new channels, particularly to see that we have a greater reach. I think that's going to be larger levers which we'll be playing on from a sales perspective to grow the business in milk and dahi and all. Similarly in marketing, again, we are doing a lot of initiatives this year. We'll be doing 360 campaigns, again, largely Maharashtra, since our ambition is to become a large player in Maharashtra to support all those sales plans.
So Vivek, as you move out and build your consumer business, you will naturally have to build on your distribution as well. So if you could tell us about how you're going about expansion in your distribution network, and what sort of marketing spends are you also putting in? If you could give us some idea about your plans here in terms of expansion.
So in terms of revenues, if we see, it will be to the consumer business particularly, if I particularly segment it out, it will be at least in the range of around 3 to 4% every year, which we will be spending. We are spending the same amount right now, and we'll be continuing to spend that in next 2-3 years as well.
And can you give us absolute numbers as well, Vivek, when it comes to investments in your marketing and distribution?
So we are spending at least 30 crores around every year we'll be spending on building up our marketing, sales and distribution.
From Vivek, from your release, we also see a lot of tie-ups happening with a lot of these retail outlets like Walmart, Avenue Supermarts, as well as Big Bazaar. What are the plans on the anvil right now when it comes to modern trade channels?
So yes, we are definitely increasing our presence. Modern trade has been a relatively new channel for us. We have started that channel just in the last 2 years. Earlier we were present largely in the general trade, but that's working out to be very well because it's actually supporting us to build further awareness. At the same time, for products like dahi, the new variants and all, modern trade is a very good opportunity wherein the consumers can engage with the products. We get an opportunity to have our promoters tell the consumers about our product, about the speciality and the USPs of our products. We have launched a lot of variants of better, highly nutritional milks and all. So modern trade is proving out to be a very good channel. We are in around 320 plus modern trade outlets as of now.
Vivek, and a word on your margins. Now, we understand that your margins will eventually expand considering you are concentrating on your consumer business, but you're also putting in a lot of investments. So, are we likely to see a dip in near term when it comes to your return ratios?
So I don't see them really going down from the current levels, really speaking, but yeah, the expansion will definitely happen after 2 years. Until then, I think it should remain in the same range.
Vivek, we'll leave it at that. Many thanks for joining in today and giving us that perspective, and all the best for the quarters ahead. That's Vivek Nirmal of Prabhat Dairy after the numbers. The numbers looked okay. The revenue numbers were up about 7%, I think, which is why the stock is down about 0.5% or thereabouts. But the margin expansion was very, very robust. And he believes the growth numbers are on track for the guidance that they gave in FY20. That's the management of Prabhat Dairy. And Agam, thanks for taking us through that. But while we are talking about companies which are in focus, I think Colgate-Palmolive is a stock that is in focus today. It was buzzing. It's still up about 3% but it's gained, more importantly, in 7 of the last 8 trading sessions. It's also set to report the quarterly numbers today. What's keeping this stock buzzing? Let's put the spotlight on that. Agam is here with that. Agam.
Well, Neeraj, we are expecting a very, very strong quarter for Colgate-Palmolive, and the numbers should be out any moment. But let's look at the way things are stacked up in today's day of trade. It's price to earnings and valuations, as well as what the analysts have to say and whether or not that's likely to change. So in terms of today's day of trade, volumes have, of course, surged, and this is in anticipation of its quarterly earnings. As I said, we're expecting a double-digit growth for its toothpaste and toothbrushes business. So as far as volumes are concerned, well, around nearly 550% increase in comparison to its previous 20-day average. Where does it leave us when it comes to valuations? Well, Colgate-Palmolive is currently trading at around 45 times FY19, that's forward earnings. And this is largely in line with a lot of its other players. Now, it does compete with something like a Dabur as well as a Patanjali in the toothpaste and toothbrushes segment. And that's the reason why we have seen valuations come off to a certain extent from the levels of around 60-65 times to now around 40-45 times. That said, given the surge we are looking at right now, well, can things change? Can the earnings of the fourth quarter change for Colgate-Palmolive? We'll have to wait and watch. Can we pull up the analyst ratings and see how things have stacked up? Well, it's largely evenly poised, because if you see buys versus sells, we have about 39% buys out there and sells at around 30%, and holds also around the same level. So it's very evenly split, even if you consider the return potential from current market levels. And do remember, this is after the surge that we've seen in today's day of trade. It indicates a decline of around 5.5% projected. However, of course, these numbers will change as in how we get analysts and they put up their own score after its earnings. But for now, we're expecting very strong earnings, as I've said, and expecting double-digit growth for the toothbrushes and the toothpaste segment, despite the fact that we've seen so much competition come through. And well, the word on the street is that they are likely to see a little more differentiation in their products in order to stand out, and that is something that's going to drive their products as well. And of course, the rural markets, as we have seen a lot of other FMCG companies as well, which are likely to drive volumes this time around as well.
We'll watch out for this one for sure. Agam, just one quick question. I mean, what's the probability of there being a big positive surprise out of Colgate Palmolive? I think it's done that once or twice in the last year, and a couple of your other other companies in this space have also managed to surprise positively on the volume front. What are the factors that could lead to that for Colgate?
Neeraj, if we were to see the numbers based on the expectations, if these expectations comes through, then Colgate-Palmolive will be the company with the strongest set of earnings in the entire FMCG bunch for this quarterly earnings. And that also means, do remember that a lot of this will perhaps be priced in. Should we see a disappointment, we're obviously going to see the stock come off after the surge that we've seen here. But the way the stock has been moving, it seems that the probability is that it is likely to see a strong quarter. And if it does come through, well, it's also likely to post the strongest quarter in the FMCG pack in India as a whole.
Wow. Well, let's wait and watch. The stock is active today for sure. It just come off a little bit from the highs of the day, but still up about 2.5%. Agam, thanks for putting that into perspective. That's the graphic dashboard on Colgate-Palmolive. The stock up about 2.5% in the session today, doing okay. There's a lot of pain though at the broader end of the spectrum or in the markets by and large. It's actually a good time, you know. Before we talk about some other companies, it's a good time to get in our technical experts on board. We need to do a slightly elongated chat today. There's a lot of pressure on some of the key large caps in this session. Let's start with Sumit Bagadia. He's Associate Director at Choice Broking. Joins us on the show in a bit. We'll get in him in as well to talk about his thoughts. But Sumit, good afternoon. Many thanks for joining in. Is there some pressure on the key benchmark indices? While a headline cut of 0.5% may not show that, the mood certainly seems to be waning, and there seems to be a bit of a loss of confidence amongst the bulls.
Hi, good afternoon. Well, yes, absolutely right. Today we are seeing a pressure in the index, and now from here on there is a possibility that the pressure can widen, and on the lower side there is a possibility that we might see levels of around 10,480, or there is a possibility that we might see levels of around 10,450 also. I think till the time we don't see any smart pullback or recovery in the markets, it's better to avoid long positions and wait for fresh long positions. At present, those who have taken short positions, they can hold on the existing sell positions. And if there is a pullback or bounce back in Nifty of 30 to 40 points from present levels till 10,550 levels, then that should be used as a selling opportunity, with the stop loss to be placed at 10,600, 610 on higher side for the downside target of 10,480, 10,450 levels. It seems that next 1 or 2 days, markets can show some pressure, and a recovery about 10,600, 10,610 levels will give a confirmation for the upside move. Till the time these levels are not taken away, it's better to be on sell side.
Okay. Would you go out and initiate some fresh shorts at the current levels, Sumit, on either the Nifty or the Nifty Bank? Would you initiate a fresh call?
No, not at the current market price. It's better to wait for some pullback. As far as view on Nifty is concerned, 10,500 is a support for Nifty. As far as OI data is concerned, it has major support at around 10,500 levels. Once 10,500 levels are taken away, we will see extended sell-off till 10,450 or even till 10,400 levels. So as the Nifty is trading near support levels, possibility of pullback or bounce back is more. So we would wait for fresh sell positions at current market price. In fact, if there is a pullback or bounce back of 40 to 50 points from present levels, then that should be used as a selling opportunity. As far as view on Bank Nifty is concerned, Bank Nifty has support at around 25,680, 25,700 levels. So there is a possibility that we might see a pullback or bounce back in Bank Nifty too. Bank Nifty has resistance at around 26,000, 26,050 levels. Once these levels are taken away, then only we will see a good upside move in Bank Nifty. Till the time these levels are not taken away, it's better to be on sell side, but avoid selling at current levels. Let the Nifty and Bank Nifty show some pullback or some bounce back of 100 to 150 points in Bank Nifty. So on rise till 25,850, 25,900 should be used as selling opportunity, with a stop loss to be placed at 26,050 levels for the downside target of 25,500, 25,400 levels.
Okay, let's welcome in Hemant Kapadia of KR Choksey, who is also joining us right now. Hemant, good afternoon. Thanks for joining us. More weakness on the benchmark indices, or it's oversold right now?
Very good afternoon to you, Agam. Yes, oversold, yes, more weakness, yes, but not without a bounce. So, frankly speaking, very much on expected lines. It was good this happened. Markets were going up like nobody's business. So, downward bar reversal coming in last week. And yes, I think no reversals yet, because even minute to minute we're seeing newer lows, but 10,490 is one support level. I would absolutely not short anything now, though there could be some more downside. There aren't any reversals, so you're trying to catch a falling knife. I'd say the easy way out, sell the 10,200 puts, 10,800 calls. Neither look like coming. 10,800 seems far away, 10,2 doesn't look like coming without a bounce. So
yes, please, yeah.
So yeah, I'll sell the strangle, yeah.
And the case would be the same for the Nifty Bank as well?
No, Bank Nifty is showing some resilience. I don't know why, but Bank Nifty is showing a little bit more resilience than the Nifty. So I wouldn't have a call on the Nifty, Bank Nifty, but the Nifty is a very slightly more clear.
Interesting. So let's talk about specific stocks. Hemant, let me first ask you, what are the stock recommendations that you have for our viewers today?
Yeah, it's too late to sell, too early to buy, but frankly speaking, Lever and Colgate look like shorts, but in a market like
Colgate
this,
looks like a short?
No,
okay,
no, but
the numbers are out and the stock has gone down a bit.
But
there's a fundamental reason for the same, arguably.
Okay, but frankly speaking, I'm not giving that as a recommendation. I'm just saying these are the ones which should be shorted because they are high-hanging fruits. So technically, the stop loss is closer. But no, why would you short a defensive when the whole world is trying to hide their head in defensive? So I have a long contra longs. Firstly, I have a buy on LIC Housing Finance. One gets the feeling that deeply oversold. Downside appears limited is dangerous in a market like this, but even then, I'd say the downside appears a bit limited. And yeah, and a buy on LIC at 476, stop loss 470, target 490, and a buy on Bharti Infratel. One gets the feeling that there is some resilience coming in, and we are deeply oversold, and the bounce probably seems to be in the offing. Buy on Bharti Infratel at 320, stop loss 315, target 330.
All right, we have Colgate-Palmolive's earnings come through, and this is turning out to be a disappointing quarter. We've had tremendous expectations. That's what the Bloomberg consensus was projecting, but that's not come to be. And as you can see, from green, we've seen a sharp drop. The first and perhaps the most important reason is that our expectations on Colgate-Palmolive were double-digit volume growth, and the volumes growth has come at the lower end of the single digits, and that's at 4% to be precise, and that is perhaps the reason why you've seen such a sharp drop. That is also the reason why it's top line has come in at a little over 1,090 crores as against the expectation of 1,150 crores. So it's a big miss when it comes to the top line as well. Well, it's a bottom line largely in line, but that's I reckon is perhaps owing to certain exceptional items, or perhaps some operational efficiency, which as of now seems unlikely. We're going to have to delve into the numbers a little more, but for now we're looking at a lot of weakness, and this is largely to do with the weakness on the top line, Neeraj.
Yeah, what could have caused the volume growth to be so lower than estimates, Agam?
Well, it's the competition. that's the easy answer for Colgate-Palmolive right now. And we've been talking about Patanjali and Dabur for the last 5 or 6 quarters now. And you know, as I was saying, they've gone ahead and tried to differentiate their products, but maybe it's going to take a little while longer before it starts showing up in the numbers.
Have the other toothpaste segments for any of the companies, I mean, if they deliver it separately, shown this chink in the armor as well?
Well, we've had indications from Dabur suggesting that there has been an improvement in Meswak. Okay. And Meswak is the key competitor for something like a Colgate out there.
Interesting. That's Agam Vakil's analysis. It tracks this stock closely. Let's get in Sanjeev Bhasin's thought on this one as well before we get in some more stocks, because the numbers are out and the volume growth is at I use the term on purpose, measly 4%. He's Executive Vice President of Markets at IIFL, joins us on Mondays. Mr. Bhasin, many thanks for joining in today. Let me start off with Colgate. I don't know what your internal estimates were, but as per the Bloomberg estimates, the volume growth numbers were fairly high than what they've posted, about 4%. Don't quite know the commentary, but what would you make of these numbers?
So, you know, the toothpaste market would be the one where Patanjali's competition would be, I think, maximum felt. But Dabur has come out with very strong numbers. Now, Dabur also has a segment on the toothpaste. So we'll have to wait for the numbers. I think there was too much of expectation built in Colgate just because on the back of Lever or a Nestle, and that may have been belied. I think the stock had run up quite sharply, and you'll see a fall. But you know, Neeraj, the whole consumption space is a very sweet spot. I think going ahead, once we get more commentary from the management, the Patanjali fear may have been overdone. I think Colgate is now reinvented itself, and through ad spendings, which could be a deterrent in this, which has hurt the margin, we think that they would be again you know, up and going and regaining their market share. So we'll wait for the commentary, but for us this would be a buy on declines going forward.
All right, Sanjeev, in that case, let me take up the rest of the pack with you as well. We've seen a very sharp surge in Hindustan Unilever, and there's no letting up out there. It's the same for ITC as well over the past couple of, well, days, should I say, especially after both announced their earnings. And these are the relatively larger companies. How would you look at these companies right now? Would they still be the better bet in comparison to the relatively smaller peers?
Yeah, so first the timing, you are aware that there is a mid-cap carnage, and part of it is due to the SEBI's guideline that mutual funds have to restrict their you know, mid-cap holdings and so on. And now you've seen even the smart money now catching on to the stocks which may not you know, fall much in this uncertainty, and that means the FMCG basket is the best place to be. But you know, don't miss the woods for the trees, in the sense consumption is a very, very big positive. I have never seen the likes of Lever trade at 3.5 lakh crore market cap, and I see no reason why ITC in the next year should not be a 4.5 lakh crore market cap. So I think that this is a very, very sweet spot. Plus you will now have the added advantage of more election type spending, where freebies may be again going to put money into the, you know, rural hands and so on. And I think that they have weathered the storm well at a time when crude and bond yields are high, because they are hardly affected by that. So, but the overall scenario is that earnings have been fairly steady to positive, and the broader market, you know, the consumption side, the NBFCs, the manufacturing on particularly capex expansion, all that is shaping up very, very well. So the short-term caveat is a weak rupee, FI selling and oil is deterring you, but I think this is a very good time to buy, particularly some of the mid-caps where the carnage seems to be overdone.
Can I draw the same parallel when it comes to the auto sector? You did say that there is a mid-cap carnage, and overall there is a certain advantage to well, the relatively larger cap companies. Considering where we are heading into an election year, we are likely to see some, well, should I say, welfare schemes come through. That also means disposable income. Can we also expect the same theme to play out for the auto sector?
Correct. So whether it's auto, whether it's cement, as a corollary to housing, whether it's housing as in the numbers of Bajaj Finance were, you know, splendid, or the pure consumption play, all of that is telling you that spending is going to be really on the anvil. Companies have remodeled themselves. There seems to be less inventory on hand, and I think that there will be very, very good times going ahead. Now auto, you've had a, you know, dichotomy that you had in the four-wheeler space, Ashok Leyland dominating the space and trading at fairly higher expectations. All that, you know, because of some one margin hit, they've seen a huge profit-taking bout. But I still think, you know, closer to 8,300 Maruti or a Tata Motor at 295 to play the CV cycle locally. But more, I would be bullish on the two two-wheeler stocks, particularly Bajaj Auto and Hero Moto. I think they would be the biggest beneficiaries of this consumption spending which would play out on the autos, and plus Bajaj Auto would definitely benefit because of the weaker rupee, since its exports in in the subcontinent are very, very strong.
Okay. Yeah, I just want to draw the attention back to Colgate-Palmolive, and it's now, by the way, the margins, standalone margins are looking okay. I think the volume growth disappointment clearly weighing in on the stock, 4%, and the stock is down about 3.5% now. We got to the fundamental view. What about the technical views? Before I go to Sumit for his stock ideas, a word on Colgate-Palmolive?
Need 11.5 months of a consolidation. Range was between 1020, 1177, and then finally we've had a breakout, but need at 1085. 1280, 10 trading sessions. Oh gosh, it's not Superman. Completely overdone. The bigger picture still seems fine. Intraday point of view, strong support at 1170. And something funny, Neeraj, I think already 12.5 lakh shares have been traded at the highest in the last 1.5 years on the NSE. One would need to wait for the delivery markings. I don't see it breaking 1170 now. If it doesn't, chances are we'll stabilize over here, drift, and stage a small recovery. 1170 is crucial. If you don't close below that today, I think there's hope.
Okay. So that's the word on Colgate, now down about 4.5%. Sumit Bagadia, we took an initial view from you, didn't get a chance to talk about your numbers or your stock ideas. So let's do that first. And if you have a call on Colgate, then that too.
See, Colgate has given a sell-off from higher levels. It was doing well, but suddenly after the results, we have seen that the stock has given a one-way correction. Now, if I look at the technical charts, it has given a breakdown. I think it has shown as an engulfing candle, which says that there is a possibility that we might see some more profit booking from present levels. 1175 is the current market price. From here on, we can see a fall till 1140 or even till 1130 levels. So for a trading perspective, one can initiate sell positions in Colgate. Those who have taken long positions, they can book and exit their long positions because from here we should see some more profit booking in next couple of days, wherein we can see levels of around 1130. So it's better to avoid fresh long in current market price. As far as trading bet is concerned, the first call is buy call, that is BPCL. BPCL seems like from here on we can see a pullback move in BPCL, in which we can see levels of around 410, 415 in next couple of days. One can initiate long positions at the current market price, or there's a dip of around 3 to 4 points from present levels, and that should be used as a buying opportunity. 380 should be the stop loss for long positions for the upside target of 410 and 415 levels in the next couple of days. The second strategy for the day is on sell side, and that is Zee Entertainment. Zee Entertainment is looking weak. From here, there is a possibility that if the stock breaks 550 levels on closing basis, then there is a possibility that we might see fall till 540 or even till 530 levels. For a trading perspective, one can initiate sell positions at the current market price. If there is a pullback of around 4 to 5 points from present levels, then that should be used as a selling opportunity, with the stop loss to be placed at 565 levels on higher side for the downside target of 540 levels.
Right. Hemant, before I take your calls for the day, I'd like your view on Bajaj Finance. This is an interesting one. We finally started seeing about a fall of around 2.5%, but after a tremendous strength last week. What levels should we keep an eye on this one?
I think, firstly, from an intraday point of view, 2080 Agam, and if you take a probably a slightly 1 week sort of point of view, the level is 2064, so 2080 and 2064, because the next intermediate support level comes in way back at 1966, Agam.
All right, Hemant, hold that thought. Sanjeev, I also want to address what's going on with the pharma pack right now. Tremendous weakness for Strides Shasun. We have seen further weakness in the likes of Dr. Reddy's and Sun Pharma yet again. What's going on? Is there any opportunity, or would you avoid taking any positions right now, considering their fundamentals?
Yeah, so I think Strides has been very, very volatile in the last 2 quarters, and the management itself has been very elusive on what the growth forward is. Now they are telling you that there is pressure on the US generic side, that contract farming is under pressure. So I think maybe the selling is overdone, but we need more further guidance from the company on the clarity for the next year. I thought the numbers of Lupin, particularly their local business, was very, very pleasing. Their new launches in Japan should make up for the shortfall in the US, and any FDA resolution should again see an upside trigger for the stock. Valuation wise, it's been cheap, but it is again at this 740, 750, it offers immense value. Sun Pharma, we thought the Taro numbers were in line to slightly better place than what most had made out. We'll wait for the numbers from Sun, but we think that once the Halol thing is, they get the go-ahead for that should be the real trigger. Again, as 450, we think the risk reward for a 20% upside, 25% upside rather, is very much on the card. So they would be a good proxy to a weak rupee, and resolution of some issues in the FDA would be the kicker.
Okay. Sanjeev, just hang on. We'll just take in one final thought from you. But before we do that, there's a management that has come, so just need to have a very quick chat with Mr. Jagannathan of TTK Prestige. They've reported a small drop. Let's ask the management about how the quarter went by and how the quarter ahead could be like as well. Mr. TT Jagannathan with us on the show. Mr. Jagannathan, good having you. Thanks so much for joining in. By your own high standards that you set for yourself, you would have been a bit disappointed with the drop in profits, even though operational picture has looked okay?
What drop in profit? Profit has grown for the year by 29%.
For the quarter, sir?
51%. 51% growth in profit.
Okay. I stand corrected, sir. What about the operational picture? Their margins have expanded.
Margins have expanded. Profits have grown. Top line has grown very well.
Okay. What's led to this expansion in margins, Mr. Jagannathan?
Better capacity utilization and price increases.
All right, Mr. Jagannathan, I want to understand how your appliance business has turned out, as well as the cookers and cookware. If you could tell me.
All round growth. But what gave you impression that the profit had dropped?
No, it's on an absolute basis what we're seeing on the bottom line. Of course, on an operational basis, we do admit that it has been a steady quarter for you. I did want to understand better.
What is national basis? Your profit has grown for the quarter by 51%. What basis can you say that the profit has dropped?
Right, so we'll have to take a closer look at the numbers. If I could just address the appliances and cookware.
No, you please take a closer look at the numbers and call me back.
All right, sir, I will do that. But can we also talk about appliances and cookware, sir? What we can expect going forward? Okay, I think we've lost the line on Mr. TT Jagannathan. Of course, the stock is reeling under pressure right now, and it's largely in line, at least when it comes to the top line. We'll have to wait and watch for more developments in this particular one. Of course, the consumption theme is largely playing out. But that said, Hemant, are you tracking the stock on a technical basis, on technical levels? This is a fairly priced stock. What would you advise traders to do should someone want to take a position here?
Slightly no, very illiquid stock, Agam. We are in a short, medium, possibly a longer term downtrend. I don't think the time has yet come for a contra play, but yeah, volume has shot up to maybe more than 25,000 shares today. One gets the feeling that we are probably in the last legs of the current fall, but it hasn't bottomed out. I have a feeling that if we break 5,600, we could see a final fall to 5.3 where one can take a contra call.
Okay. Yeah, we'll try and touch base with the management of TTK, because I don't know what numbers he was referring to, but if I look at the quarterly numbers, 31 March, the profit, the overall profit for the period has come off a bit. In fact, quite a bit. It's I think at 37 crores versus 55 crores on a YOY basis. The profit numbers have dipped. Even on a quarter-on-quarter basis, the profit numbers have dipped. I think Mr. Jagannathan probably I don't know what numbers was he referring to, because the exchange release numbers do mention that the bottom line numbers have come off quite a bit compared to both YOY as well as the year-on-year basis. But if you just look at the consolidated audited numbers for 31/3/2018 versus 31/3/2017, the numbers have come off. We'll try and touch base with the management and try and ask him as to what led to this. Having said that, Sanjeev, do you track this space? the consumption story, while still very, very strong, in select pockets is showing some signs of wilting. I mean, one of the battery makers, for example, didn't come out with the best of numbers. Ashok Leyland, I thought the numbers looked okay, but maybe slightly below what the street was working with. TTK Prestige, I'm just comparing chalk and cheese, I know. I'm just looking at the overall consumer discretionary space, not the staple space, and that's showing some chinks at its select pockets.
Yeah, so Neeraj, as a disclosure, I own TTK Prestige and I've had it for the last, I think, 30 years. You know, it has been one of the greatest wealth creators. Mr. Jagannath is a standout. And in the home appliances, you can't but be, you know, bullish, seeing the drastic change in wealth and, you know, the upside limit. That's why you have an Asian Paints, which has never diluted equity, hit trade at the highest levels, you know, ever we've seen. So I think it's a glass half full, half empty. The problem is that these stocks are very, very well valued and well owned, so there will be this bout of profit booking. But you know, you can't get consumption wrong. That's what I'm saying, that there is a fear because of this inherent talk and rhetoric on oil and bond yields, which is definitely going to hurt the economy for the time being. But I think the government is well equipped, and once these elections are over, I think I would be very, very bullish for the next 3-4 months on you know, more progress on some of the government initiative. So any of the consumption stocks are a buy, but definitely be choosy about what you're buying, in the sense the basket which you're buying, whether it's paints or it's tires or it's, you know, like you mentioned, Exide from 200 hits 265. So where is the weakness? At a time when markets are not doing anything, Exide hit new highs. And I relatively am very, very bullish on Exide, even though lead prices and nickel prices in the recent past have started to move up.
Sanjeev, you know, speaking about crude, and you just alluded to that point, I wanted your view on the paint companies. And I know I'm talking about in the near term, and a lot of this effect will come through with a lag. That said, a lot of these paint companies are still holding up to their lifetime highs, such as Asian Paints and Berger Paints, despite the fact that we've seen an uptick in crude as well. Is it one of those factors now that the market has already factored in, you know, the rise in crude, and now it is largely about the volumes and expected uptick in volumes?
Well, Asian Paints has a 63% market share in the decorative segment, and the numbers this time were a huge howler in front, you know, on the upside, and most of the devil in being crude and others has been passed on. Now these are not, in fact, let me tell you that crude and Asian Paints has the best correlation on the upside. It's a myth that they are not able to pass on. They are very, very sharp in that. Their costing, their other things are very, very. Now in the short run, of course, if the stock is trading at 1350 after the results, there will be the usual bout of pessimism because you don't own it. And I think that if there is one stock to be owned, it's Asian Paints. So let the market see some more correction because of crude, which we anyway think will have made a top at 82. So I would be relatively very, very bullish going into June, where I think crude is headed for a correction, and that could play out in the shape of the ones which are most related, you know, the derivatives like Asian Paints or some of the oil marketing companies.
Okay, Sanjeev, we'll leave it at that. Many thanks for joining us today and giving us that perspective. Really appreciate your time. That's the view from Sanjeev Bhasin of IIFL. Well, that's the fundamental view, at least for the first half an hour of trade of the last 1 hour. Before we get in our technical experts on board, let's just try and get in Nikki Mirchandani, who's speaking about Ultratech. Remember, the stock started off very, very well in the morning, was up about 3%, but since then has cooled off. However, the deal net is positive for Ultratech as compared to Century Textiles. Let's get in Nikki to talk about why is it that not just this deal, but even otherwise, Ultratech has been very resilient compared to some of the others. Nikki.
Thank you, Neeraj. Well, it's clearly the aggressive growth strategy that the company has embarked upon, which has the clear distinguished Ultratech as compared to the other pan-India players like ACC and Ambuja Cement. In terms of the recent acquisitions that the company has undertaken is JP. Then we've also seen today's deal which came through in terms of the Century Textile Cement business, and also do bear in mind the fact that we are now on the way to, the company is now on the way to bid for Binani Cement assets. Also, if you look look at the current capacity, geographical presence with this acquisition, the capacity from East currently, which is at 11.7 MTPA, goes to 16.1 MTPA, as you can see in the chart here. Second Central with 21.1 MTPA goes to 25.3, and then you have in the West, which is currently at 21.7 and goes to 26.5 with this deal. Net, we would see the overall domestic capacity, which is currently standing at 92.5, with this deal going to 106. If you see, this kind of aggressiveness is also reflected in the type of the valuation that the company is demanding as compared to its peers. If you look at all the metrics that can spread across, be it in terms of price to earning ratio, EV to EBITDA or EV per ton, you would see UltraTech demands a premium as compared to its peers at PE of 43 times as compared to 20 times that we've seen AC Ambuja. As compared to EV to EBITDA, we're seeing at 16.3 times as compared to 15 of that of ACC and 11.7 that's seen by Ambuja. Same is the case that we can see in EV per ton. Despite this higher valuation, we still see that the analysts are actually bullish and suggest UltraTech over many pan-India players. If you could look at the rating there, 29 analysts suggesting a buy, vis-a-vis 16 for Ambuja and 17 for ACC. However, the return potential relatively is less for UltraTech as compared to ACC and Ambuja. Also, do bear in mind the fact that these two stocks, that is ACC and Ambuja, have seen sharper correction as compared to UltraTech. Also, if you look at the overall capacity addition, which now plays out, you would say Ambuja Cement, which is currently for 2018 at 29.7, grows to 31.4, whereas that for UltraTech Cement goes up from 92.5 to 109.4, both on account of organic as well as inorganic growth plans. Back to you guys.
Okay, thanks for bringing us those details, Nikki. But it's interesting turning out when it comes to the cements sector. But Sumit, can I get a technical check with you on UltraTech Cement? It's come off quite substantially from day's highs. How are you viewing trade on UltraTech Cement right now?
See, UltraTech Cement has support at around 3850, 3800 levels. We feel that till the time these support levels are not taken away, it's better to avoid sell positions at the current market price, because it has multiple support. In last few years, we have seen that it has taken a support at around 3850, 3830, 3820. So there are multiple supports for UltraTech around these levels. I think overall we should see a pullback or bounce back move till 3950 or 4000 levels, and once the 4000 level is taken away, we will see a fresh upside rally in stock for the targets of 4200 levels. Immediately from here on, we should play for a pullback, and on higher side we can see levels of around 3950, 4000 levels. At present levels, it's better to avoid sell, and one should go ahead and take long positions for next couple of days.
Let's take a break on that note. Before we slip into that break, hear out some of the top voices that spoke to Bloomberg Quint earlier today.
There is nothing that we're going to defocus on. All our businesses are important. In fact, one of the strategies of the company is to ensure that while we would want to have the domestic truck business to grow and grow as efficiently, if not better than the market, we would also want the rest of the businesses to grow even faster. So we have the bus business, we have the LCV, we have defense, we have aftermarket, we have the power solutions business, and the international business, all of which we have very clear growth plans. So we are in the process of implementing this, but these growth, trajectories will happen in the medium term, because there's a lot of foundation that we are laying at the moment to get the growth even faster.
That's Ashok Leyland, of course, but joining us on the phone line again is Mr. T.T. Jagannathan, the chairman of TTK. Lots to talk about, but first address the numbers and just want to get that clarity as well. Mr. Jagannathan, thanks so much for joining in again. I'm just trying to get a clarity, sir. I'm looking at the Bombay Stock Exchange release, and the reported profit after tax on the consolidated numbers for the quarter stands at 37 crores, if I'm not wrong, versus 55 crores. Admittedly, there was a tax expense which was not there this time around, which was there the last time. Having said that, the reported numbers, the reported profit is lower than the corresponding quarter last year.
Please listen to me. Do you want me to talk or do you want to talk?
Please, sir, tell me.
The last year there was a merger with TBI, so we took a tax credit of 18 crores.
Right, sir.
Pre-tax profit last year was 41. Where is pre-tax profit? Yes. 41 crores.
Mm-hmm.
This year pre-tax profit is 56 crores.
Okay. Yeah,
And
so
we paid normal tax this year.
Yeah, which is where I think the confusion came about, because the reported profit was lower, there was a tax expense. So I think that's where the confusion happened. Having said
Yes,
that,
however,
sir,
we've grown by 51% in bottom line.
Right. So
for the quarter.
Now, sir, if we can, let's try and get the details of what led to that growth. One, I'm sure the EBITDA numbers have looked okay. Can you tell us, one, break it up into volumes and pricing?
EBITDA numbers have grown from 1.11% to 14.2%.
Right, sir. And this continues with what you did in the last quarter as well, because I think EBITDA grew 37% last quarter as well.
Yes.
Is this a sign of things to come?
Yes, it's been a stellar year, and we believe that we can succeed. Yes.
Okay. What about volumes versus prices for the quarter and for the year as well, Mr. Jagannatham? And how do you believe?
The prices top line for the quarter grew by 15%.
Right.
But adjusted for GST, the top line grew by in excess of 20%.
Mm-hmm.
And bottom line, as I told you, grew by 51%.
Okay. Last quarter, if I'm not wrong, at least your growth seemed to have led by traditional cookers and the appliances segment. Has that been the case this quarter as well?
This quarter has been all-round growth. There's been slight smaller growth in traditional, because last year we had a price increase in June, so we loaded the market. This year we did not have a price increase, but still the traditional market also grew.
Okay. The cookware segment had underperformed the last quarter, I believe. LTL growth was just about 2%, I think, due to seasonality. Has that changed?
I'm sorry, can you repeat that question, please?
The cookware segment, sir, I believe
I told you, grew only by 2.5%, yes.
Yeah, so, I mean, so when will that change? Because I understand seasonality impacted it in quarter 3 and therefore just about a 2% growth. Do you believe that will change in the first couple of quarters?
It has already changed.
Okay, and will it improve further in the first couple of quarters, sir?
Yes, yes.
Okay. Lastly, what do you believe would be the trajectory for FY19? I'll tell you what the market believes, sir, and you tell me if that is right or wrong.
Yes,
but people believe that a product mix which could be better raw material management, all of these could lead to an improved performance from you as a company for FY19. Is the market correct in these assumptions, Mr. Jagannathan?
Absolutely correct.
Could you give us some guidance, sir? What the numbers could look like and FY19?
Giving guidance because everything is so volatile these days. I don't know what raw material prices are. I don't know what the government is going to do. There's an FY19 election. Things are so volatile that giving any guidance makes meaningless. But I can tell you that I agree with the market.
Okay. Okay, can you even if you can't give me a guidance, can you tell me if gross margin expansion that you showed over the last couple of quarters, at least if not more, will that continue to happen?
We will continue to maintain the margin that we made.
Okay, no, but that is the EBITDA margin. Would the gross margin expansion continue, or do you believe rising raw material costs could impact that?
No, it will be this. What we did last year, we will continue to maintain. We will maintain the same margin.
Okay. Fair call. Thanks, Mr. Jagannathan, for joining in and giving us that clarity. That's TTK Prestige, a healthy year, a healthy quarter. And the stock has come off a bit, though, 4.5%. But I think the anomaly out there, and which is what I think confused everybody, was that while the reported numbers looked optically lower, 37 crores versus 55 crores, as we add back the 4 crores of the exceptional item the last quarter around, and then, of course, the tax expense, then on a reported basis, the PBT before exceptional items would have shown a growth of about 40-odd%. 41 crores was the PBT before exceptionals last time around, and 57 was the PBT before exceptionals. So he was referring to that number as a management would. The reported numbers, the reported bottom line numbers looked a lot lower. Having said that, good quarter, margin expansion, gross margins have expanded 2 quarters in a row. Seems to be okay. The management shying away, of course, from giving guidance in these volatile times, so difficult to take a call there. Having said that, Hemant Kapadi, if I were to request you for a chart check on what the numbers or what the levels could look like in TTK Prestige, what would you say?
I'd say, Neeraj, the worst is not yet over. So currently, I wouldn't have a counter call, but if this were to sink some more from here, Neeraj, and especially around the 5300 mark, I think I would definitely have a decent, if not a solid contra buy at that level. Currently, we're in the middle of nowhere.
Okay. We are going to now take a short break, but don't go anywhere. On the other side, we get you the Fab 4 stocks of the day, as well as the dealing rooms and what they are recommending on the other side. Stay tuned in.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You're watching Countdown. Well, the markets are looking downwards for now. Some weakness in the benchmark indices with an adverse, advanced decline ratio for now. But that doesn't mean we do not have stocks which are moving up. So let's bring in Yash Upadhyay, who is going to give us the fabulous 4 stocks of the day. Yash, over to you. Good afternoon.
Hi, good afternoon, Agam. So first up, we have Sheela Foam. Now this one had reported a splendid set of numbers. Their revenues are up 15% to over 500 crore rupees. Their net profit rose 88%, while their margins, they have nearly doubled from a number of about 5.2% in the same quarter last year to almost 10%. CMI Limited is up 4% today. It is HDFC Securities' pick of the week. Now they have assigned a buy rating and have set a target price of 361 rupees, indicating a return potential in excess of 22%. And now a couple of reasons behind this. One, they believe that the increased infrastructure spend by the government is likely to drive their top line growth. Two, the recent acquisition of General Cables, this is likely to help scale up their operations and expand margin. And three, initiatives like Make in India and the implementation of GST, that would shift the industry dynamics in favor of the larger domestic players. Indoco Remedies is up 5% today. A big relief coming in from the US FDA front after the company said that it has completed the inspection of its API plant at Patal Ganga. Not to worry, it has received 3 observations under Form 483, but none of them are critical in nature and do not pertain to any data integrity issues. Additionally, they have also received the clean sheet for their Kilo Lab facility. And finally, we have AU Small Finance Bank. This one has surged as much as 4% today after the company said that Singapore investment arm Temasek Limited would be investing close to 1,000 crore rupees in the company. Now they have the board has approved to issue close to 43 lakh shares at a price of about 620 odd rupees or so, over and above the 1 crore convertible shares. Back to you.
Thanks a lot for that, Yash. So those are some stocks to watch out for. Lancelot Tikana, he's CIO at ValueX, joins us right now on the show with his thoughts on the fundamentals. Actually, just before I get to Lancelot, though, Lancelot, just hang on. Hemen is pointing out some price movements, interesting ones at that, on Colgate-Palmolive. So let me just first get that view out of the way. Hemen, Colgate-Palmolive?
Yes, Neeraj, it was 1170. It went to 1161, gave a bounce back to 1205. So I think stability should come in, Neeraj, and I don't think it looks like closing below 1170 today. So some consolidation and some period of not going down.
Okay. Lots of queries on our social media pages. Views for Ashok Leyland being asked for. Fundamentally, I would presume news on Colgate-Palmolive sudden dip. Well, that was because of the volume growth numbers, which we've already addressed. We'll try and take some calls. I think Ashok Leyland remains the center query. Let's start off Lancelot Tikana's discussion with that. Lancelot, good having you. Thanks for joining in. Some of the auto names have shown some chinks in the armor. If 2018 is to be taken as a whole, Maruti for the year at large is underperforming. We now have Ashok Leyland starting to come off quite a bit from the levels that it used to trade at. What's happening here, and particularly in Ashok Leyland, the 9% dip, does it give you a chance to get into the stock? Okay, I think we've just lost Lancelot again. We'll just try and repatch that line, but you know, maybe try and get a chart check here. Okay, do we have Lancelot? You're playing fun and games out here. Lancelot, can you hear me?
Yes, I can hear you.
Okay, the views on Ashok Leyland, Lancelot. Fundamental view on Ashok Leyland.
Yeah, my view is that I think Ashok Leyland is, fundamentally a very strong company. It's in a structural, let's say, realignment of its businesses, because it's focusing on the heavy commercial vehicle, and especially what is interesting to me for Ashok Leyland's point of view is that the focus on exports, especially in the African markets, is something that can add significant value to the company, because the African markets have similar conditions to the Indian markets, and Ashok Leyland has proved in India that it can produce trucks that are rugged and cost effective in difficult road conditions, unlike the European manufacturers who have struggled to make value in terms of the proposition between price as well as durability. So I think that's a strategic advantage that Ashok Leyland has on its business in the African markets. Additionally, I think they will also see some further upside on account of the defense contracts that are in the pipeline for them, where they have been shortlisted as one of the top contenders. So once those contracts are announced, you could see further traction on the stock. So while it may in the short term appear to be a bit expensive in terms of valuation as compared to its peers, I think Ashok Leyland should be accumulated at every fall for a 3 to 5 year horizon.
All right. Well, Ashok Leyland for now, well, I've been told is registering a fall that's the largest since November of 2016. So that's the sharpest cut coming in, well, in a very, very long time. That said, I'm starting to see a lot of these PSU banks populate the top gainers in the Nifty 500 right now in the last 10 to 20 odd minutes. In fact, the good 6 or 7 stocks from the top 10 gainers in the Nifty 500 belong to the public sector space. And I want to bring out something like a Bank of India, that's up 5%. Union Bank is up 5%. Canara Bank is up 4.5%. Punjab National Bank is also picking up. That's up 4.3%. Syndicate Bank along with Bank of Baroda. So a lot of gains coming in here. Lancelot, I'm not sure how favorable you view some of these public sector banks, but would you like to hazard a guess behind the gains, or is this just one of those days where we are likely to see about a short covering? And in general, would your view then still be with private sector banks, or would you still see some, should I say, opportunities in some of these public sector banks?
Well, as far as the public sector banks are concerned, I've always been fairly negative about them for quite a while right now. And even though valuations may seem very attractive because they've fallen significantly, I think for the public sector banks to create long-term value for their shareholders, they need to be able to actually refine their business model itself, bring in a more professional management, and that can drive growth as well as improve the performance on various parameters, be it on the NPA front, be it on the marketing front, or even the CASA. So these are the areas where we need to see some change in the management of public sector banks, and which is why they are not able to really compete with the good private sector banks. So I have always been in favor of investment in private sector banks, and I think that is playing out at the moment. But while there may be some bounce because of value picking, people might be searching for value in the beaten down banks. I think that can be a very short-term kind of bounce, because for long-term value to get created, I think the business model and the operating efficiencies that need to be brought in, a lot will have to be done by the managements, and I just don't see it to be in place at this point in time.
Okay, the PSU banks are doing well. Anything that features in the list of buys out there, Sumit, from the PSU banking lot on the charts?
See, today we are seeing some smart recovery in most of the PSU banking stocks. At present, SBI looks good to me. I think very soon we will see a good move in SBI from here on, from the levels of 244. We can see a positive move in which we can see levels of around 260 as a immediate target. And if 260 levels are taken away, then we will see extended move till 270, 280 levels in next couple of weeks. I think it's better to take long positions in SBI at current market price. If there is a dip of around 2 to 3 points, then that should be used as a buying opportunity, with the stop loss to be placed at 236 levels on lower side for the upside target of 260 and 270 levels.
Gainer on the Nifty, 2.24% at 244, doing rather well for itself. What's not doing well, and again a query on our social media pages, is IMFA, Indian Metal and Ferro Alloys. Don't know about a fundamental, we will ask Lancelot about that, but technically IMFA down about 15%.
Oh, okay, it's been exacerbated today, Neeraj, but frankly speaking, we have been corrective since 24th March 2017. What we saw was a bounce back to 800. We made a lower top, lower bottom, and frankly speaking, Neeraj, the last level which should have held was 385. We're just below that. So I have a feeling further pain, very much possible. It's not a FNO stock, but one, I wouldn't sell. Two, I wouldn't short it. Been oversold, we've been down for some time. I don't think there's too much of a downside, and close about 385 in the weekly would mean a feeble attempt at a recovery and the first technical positive, but definitely not a sell at this point in time.
Okay, that's your view on Indian metals. Actually, I'm not sure if I can take this up with Lancelot. Lancelot, do you track Indian metals and ferro alloys? And if you do, how are you viewing this one? If not, what else would you prefer in this sector?
Well, unfortunately, I don't track that Indian metals ferro alloys, so really I can't comment on its fundamentals. In the metal space, I would still go with Tata Steel and Hindalco, because I think these two, the metal space, number one is global scale is very important, and these two have significant cost advantages over their peers because of location, because of access to ore, and because of the strategic locations that their plants are located in. So given that background, the commodity prices are being moved in a kind of a bull market, and the main reason driving the rise in commodity prices has been the shutdown of capacities in China. And these shutdown of capacities are of a permanent nature, and very unlikely that we will begin to see new capacities come up. So given that background, I think Tata Steel and Hindalco are well poised to take advantage of the increased demand through additional volumes. They also have fresh capacities coming in on stream, and the prices for these commodities are likely to be relatively stable or even go up, keeping in view that they have to pass on the increased cost of ore and power, etc. So I think these are stocks which one can accumulate because we are seeing a strengthening cycle of commodities, and that could last for a couple of years. So one should be invested in the cycle to get the benefits on the upside.
Okay, fair call, and it's a stock which is not too many people track as well, IMFA, but some other metal stocks and views on the metal space as well. But 3 minutes past 3:15, it's good time to get in Yatin with a check of what dealing rooms are recommending in the session today. Yatin, good afternoon. What are your sources telling you?
Afternoon, Neeraj. Colgate, that stock disappointed in terms of the fourth quarter earnings, and dealers on the basis of F&O trends are indicating that STBT could be a good strategy. Of course, the stock has seen some pullback from the day's low. But dealers do indicate that in general they are looking at some profit taking and selling which is happening at higher levels for select FMCG names. Also watch out for the PSU banking pack. Bank of India, of course, that is one stock wherein dealers are recommending a buy based on the F&O trends. But tomorrow we'll have the mother of all PSU banks, SBI, reporting their quarterly numbers. So everybody will be keenly watching out for SBI numbers and the entire PSU pack, which is bouncing back smartly in trade today. So watch out for PSU banks, especially the likes of SBI and Bank of India. That remains in the dealing room focus. And Inox Winds from the cash market segment, that is also one stock wherein dealers are indicating HNIs are buyers at lower levels.
Okay, well, thanks for that, Yatin. We'll be keeping an eye on some of these stocks that Yatin's spoken about, especially Colgate-Palmolive. But Lancelot, coming back to the OMCs, do you think a large part of the gains in crude has already been factored in? And in that case, what would your bet be in this sector?
Well, OMCs are in a very interesting space because the prices have corrected significantly on fears that high crude prices will dampen their profits because they will be forced to absorb some of the price increases. But I think that the negatives have more than been priced into the stocks, and I am fairly bullish on Bharat Petroleum because I see that number one, the government is not going to change its policy of subsidies and forcing the oil marketing companies to subsidize costs. It is allowing the pass-through to happen. So while there might be a little bit of a delay or there may be a price arbitrage that takes place, that's more of a short-term impact and not really going to stretch out over a longer term. Over the longer term, I believe the oil marketing companies and BPCL in particular would be able to improve their margins going forward. They have been concentrating on a large part on the marketing retail network, and that has been expanding. We've seen good volume growth for consumption in both petrol and diesel. So that is positive for BPCL. The other thing is that their Kochi refinery has just come on stream, so it has added a large refining capacity, which should generate additional revenue given that margins for refining are fairly stable. And I think the outlook for the next 2 to 3 years continues to remain attractive. And if you're looking at these stocks, they're trading at a fairly attractive dividend yield as of today. One has to be maybe an investor who has with a 2 or 3 year horizon, and I'm sure these stocks would give above the Nifty returns.
Okay, let's get in our closing strategies then from some of our technical experts. Sumit, I'm going to come back to you. What you seeing or witnessing on the charts right now, and what would be a call for tomorrow? It could be a sell or a buy.
See, a stock specific PSU banking stocks are looking good to me. I think there can be a pullback move for next couple of days in most of the PSU banking stocks. SBI have already given now. Canada Bank has support at around 236 to 35 levels. It's like it's making like double bottom at 236 to 35 levels. I think till the time these levels are not taken away, one can take a chance by initiating long positions in Canada Bank for next 1 or 2 days. One can initiate long positions at the current market price, that is 244 levels. With the stop loss to be placed at 238 on lower side for the upside target of 260 to 65 levels.
All right, and Hemen, how about you? Anything interesting showing up in your charts?
Yes, I thought it was a toss-up between the Bank Nifty and Reliance Industries, Agam, but I'll go with a BTST on Reliance Industries. All
right, it's a BTST for Reliance Industries. It's currently trading at around 930 odd levels. And well, it has seen a surge in the last few minutes, so we'll keep an eye on that one as well.
Agam, I wanted to talk about 2 or 3 names. Firstly, by the way, Strides Sashun at 12%, it's trading at the lowest point of the day. Ashok Leyland at 10% is the lowest point of the day. Kitex Garments 19.5% is trading at the lowest point of the day. But I want to talk about a winner. I just marked 3 losers, but I want to talk about a winner, and that is Sheela Foam. Fabulous numbers there. The stock is up about 12% at 14.55. Lancelot, do you track this one? The fundamentals of Sheela Foam?
No, unfortunately, I don't track it.
Drawing a bit of a blank, let me try sugar then. Do you track the sugar space? The last couple of days, the stocks have been abuzz. Lots of rumors flying around.
Well, I am not one of the bullish guys on sugar because unlike the other commodities, the agro-commodity space has a lot of regulatory risk as far as government intervention is concerned, and it is an extremely cyclical business. So while outlook for sugar might be good in the short run, I have stayed away from all these agri-commodities because I don't have the expertise in that space at all.
Lancelot, one of the big gainers in today's day of trade is TCS. Of course, we've had the release of its annual report, and we've also had some commentary coming in from the management as well as the chairman of Tata Sons. How are you viewing TCS right now, and how would you compare it to some of its peers such as Infosys, Wipro, HCL Technologies in the space?
I think TCS is well poised to continue its market leadership in the space. The last quarter numbers that came out was very interesting to see that digital revenues had grown significantly and the profit margins from the digital income was much higher than the services business. So I am bullish on TCS. I think that the company will continue to grow and generate above market returns both on the volume as well as the price front. And now, with the depreciation in the rupee adding to a little bit of upside, I think we should see better results and better earnings growth going forward for TCS. So I would still continue to be a buyer at every decline for TCS in the near future.
Strides Sashun at all, Lancelot? I think Lancelot didn't get my question. Lancelot, do you look at the business of Strides Sashun at all?
No, I don't track Strides Sashun, so I don't have any idea of the business as well.
So before we get in some closing comments, if you can do a chart check for me. One is on Strides Sashun, the other one is on Castrol. Chalk and cheese, but that stock too is trading at fresh lows and in fact 52-week lows for itself.
Frankly speaking, Strides Sashun is very surprising, Neeraj. 620 we saw a downward breakout from a descending triangle, but nothing seemed to suggest that we're going to tank and become half. Now we are getting close to its 4-year low of 297 in Feb 2014. I know it's far away, but that's where one can expect some support to come in, Neeraj. And in terms of Castrol, it's posted a fresh 4-year low. Thing is, it's been down for 5 weeks in a row. It's oversold, but that's not preventing a further downside. Not sure how to read it. In the near term, I guess I wouldn't be ultra bearish from here. And we are getting close to supports at 160. So I'd say it looks weak, but downside at this point in time seems a bit limited.
Okay, along with Strides Sashun, are the other large cap pharma companies bearing down on the benchmark indices? Well, I'm going to toss over to Neeraj to see what's moving these indices. Neeraj.
Well, Agam, thanks. As we wrap up the markets, me and Agam on what's really turned out to be a painful start to the week. And optically, it may not look so. The Nifty, though, 0.8% is almost ending at the lowest point of the day. Not accompanied necessarily by the Nifty Bank. A lot of other factors like pharma, etc. have played. But the mid caps and the small caps really have been decimated. 2.5% down for the small cap index Mid-caps down about 1.75%. It's been cruel, the kind of pain that has been inflicted upon the broader end of the spectrum the last few days. Call it pre-election, post-election, has just been taken to the cleaners. And the market breadth has been terrible today as well. But I'll start with the index, then Agam will bring up the mid-caps and the small caps. SBI holding fort ahead of its numbers tomorrow, about 2.5%. There's some strength in select IT names like TCS and HCLT. But look at the pain points here. The DRL, Sun Pharma, Cipla, Pharma has been taken out completely. Yes Bank is down about 3.5%. Tata Motors is sub 300, and that's a big level to break. Titan is corrected and continued to correct, down about another 2.5%. So whether expensive valuations or weaker hands, you had a lot of punishment being meted out to the index boys. But that beating is nothing, Agam, compared to what's happening at the mid-cap end of the market, because the mid-caps and the small caps have been decimated.
Absolutely, they have been, Neeraj. If you consider the advanced decline ratio on the Nifty 500 too, we have just about one gainer for 4 losers. But I'm going to start off with some of the gainers, and we have strength in Sheela Foam. We've seen good surge coming through, and on the back of earnings, we started to see some traction, and it's, as a matter of fact, one of the biggest gainers when it comes to the Nifty 500. What else do we have on our radar when it comes to, well, the mid-cap space? Well, at least in terms of gainers, we also have, well, some of these counters which again moving up by as much as 7%. On the losing end, however, we have substantial weakness in Ashok Leyland. That's down as much as nearly 10%. And there is no respite for some other counters as well either when it comes to something like a Kitex Garments, that's ended the day at day's lows. That's down as much as 20% now. Of course, we've spoken enough about Shasun, but we should address that it's also eventually closing the day by as much as 12%. But I'm going to round up this mid-cap movement through a positive, and that's the surge in the public sector banks that we've seen. So, well, we've seen gains in something like a Union Bank, or for that matter, well, Bank of India, or even Canara Bank or Punjab National Bank for that matter. We've seen gains come through, and that perhaps is a positive. Can this strength sustain? Well, we're just going to have to watch. So on the whole, well, that's as far as the mid-caps universe is concerned, Neeraj.
Well, let's start off with then the market breadth, Agam, because that's the pain point really, and the market breadth will come up on your screen. That's terrible. That's, well, 1:4.5 or thereabouts, yeah. So the market breadth has looked very, very weak today. I suspect the volume should be higher as well, Agam, in today's session. Maybe they are high, I don't know that. But yeah, the F&O volumes certainly seem to be higher than what is par for the course. Arguably, some options activity and futures activity would have taken place. I don't know if you spotted that. Right. That certainly seems to be the case. Well,
Neeraj, in comparison to last week, where we saw turnovers standing at around 15 lakh odd, the turnovers have come off, but that was essentially on the back of elections. If you disregard that, yes, this certainly is an increase in that number, especially at the NSE F&O at around 6.5 lakh odd crores. So we have seen a pickup, but if we can take a look at the indices themselves and see how well the heat map is panning out right now. You take a look at TCS, and that's the only one that's standing out. TCS and SBI are the two heavyweights which have kept indices in place to a certain extent, but substantial weakness coming in the likes of HDFC Twins, HDFC Bank and Kotak Mahindra, well, contributing to the bulk of that weakness coming through. And on account of that, we're seeing a good cut of around, well, 0.8% for the Nifty and 0.7% cut for the Sensex.
Yeah, and Pharma didn't make it to the list at all. I mean, except for one. Look at what's happened to Sun Pharma, Dr. Reddy's, and a few others. Anyways, let's wrap up the market. Some final thoughts from our experts before we do that. And Sumit Bagadia, how does this set us up for the rest of the week? The pain today.
See, markets is closing near lower levels, and if 10,500 is taken away, then there is a possibility that we might see extended sell-off, in which we can see levels of around 10,450, 400 also. A fresh sell-off can be seen if Nifty is able to break 10,500 levels. A small pullback or recovery is possible because 10,500 can act as a major support for Nifty. So pullback till 550, 580 can be seen. On higher side, 10,600, 610 will act as an immediate resistance. Once 10,600, 610 is taken away, then only we should go ahead and initiate long positions. Till the time these levels are not taken away, it's better to be on sell side. Tomorrow, if the market is able to break 10,500 on lower side, then we will see a sell-off in which we can see a fall of around 50 to 80 points in next 1 or 2 days.
Heymen, what stands out for you now when it comes to the benchmarks, and how are you viewing trade for now?
I have a feeling if we open gap down tomorrow, or we weaken further below 10,490, I'd probably take a 40-point stop loss and take a contra call and go long. I think Bank Nifty looks oversold, looks interesting. Reliance, Gas Authority, Dalmia Bharat all look like BTSDs. I think it's a bit overdone in the short term. This is not a trend reversal, but I have a feeling that you can't flog a dead horse so much, and we're due for a bounce. Whether that bounce comes in tomorrow or it comes in day after, it's hypothetical, but I have a strong feeling that a bounce is around the corner. And Bank Nifty looks better placed than the Nifty, so I wouldn't short anything. I'd go selectively long, or at least I'll wait for a turnaround on the hourly charts before going long, but no shorts.
Hey, okay, that's an interesting one. Thanks a lot for that, Heymen. Gentlemen, both of you, Sumit as well as Heymen, many thanks for joining in today and giving us that perspective. Really appreciate your time today. Lancelot, if we do have you, then one final thought. Does this broader end of the spectrum move unnerve you for putting fresh money to work? Because valuations, if they were not in favor a while ago, for a lot of names, are suddenly now a lot more favorable. Mid caps and small caps.
Yes, I think if you look at the way the mid and small caps have moved in the last in the last year, and then see the decline that we have seen in the last couple of months, many of the companies are now becoming favorably attractive as far as valuations are concerned. But one has to be selective, because you have to start looking at which of these mid caps can continue to maintain their earnings growth as well as their profit growth in the same manner to enable them to be justified of higher multiples. So that's where the challenge lies at this point in time, is to sift through these various mid caps and look at companies that have a sustained business model that allows them to generate higher profits and grow at the same rate they grew in the past 1 or 2 years. And those are the companies one should be investing in, because there could be many companies which have fallen when they look cheap. But if these companies are not able to actually continue to grow their profits and get impacted by the adverse macro situation, both on the currency front, on the inflation front, on the higher interest costs, so you could see a large number of mid-caps businesses getting impacted because of the adverse macros. And those are the companies that one should avoid, because the trick there is that if you feel that they are cheap, but effectively they can actually fall much further, because a cycle of bad earnings or lower earning can trigger off a further re-rating, and because they are not relatively widely traded, you could see much steeper falls. So that's the challenge now, and one as an investor or a fund manager has to stick to companies with good fundamentals and regular earnings growth, and then this can become an attractive time to start investing.
Lancelot, thanks for joining us and giving us an update on the markets as well as your views, taking us through your views. And I'd also like to thank Sumit as well as Heymen for joining us and giving us their views when it comes to the different levels on the benchmark indices as well as the stocks that they have recommended. And with that, it's a wrap on this edition of Countdown. But don't go anywhere. Up next is the Market Wrap, where we get you the trading sessions wrap on Bloomberg Quint Live. Stay tuned in.